I want to begin with the United States and get to some of your forecast on the US for GDP. Growth in the United States projected to slow but be cushioned by monetary policy, with growth projected to be at 2.6% in 24 this year and 1.6% in 25. Two-part question. Why the slowdown, one? And two, why do you think we can actually stabilise around 1.5% GDP in America and not go to someplace worse?
Well, good morning. Great to be on the show. Well, first of all, I think it's important to realize that we're talking about a very robust U.S. economy compared to the rest of the world, because we come back to China. China's slowing down quite significantly. We also think that Europe is not doing as well as it could, and other parts of the world are not doing so well. So under the circumstances, knowing that we had a huge pandemic and a big energy crisis, the United States is doing fairly okay. So what explains the slowdown? Well, first of all, there's a statistical a carryover issue, which basically the last quarter of 2023 was stronger than we expected. It has a statistical carryover, and so that explains part of the slowdown. And so if you take into account quarter on quarter, we would forecast, 1.9 for the slowdown will be from 1.9 to 1.6. But the second issue, why is this happening? Well, first of all, it has to do with consumption. And so a lot of people had savings during the pandemic, and they are running out. And so this is not so good for consumption. So there's slowdown in consumption. There will be a slowdown in government consumption, which is welcome, because we think that both the deficit and the debt in the United States, we should go back to fiscally prudent policies. So I think it's very important to go there. And obviously, there's also an issue regarding exports and investment. But we think that main reasons why the United States will continue to do well is because it continues to be a very dynamic economy compared to other parts of the world, even though certainly the slowdown is explained by the consumption, both of the government and the individuals.
You make a great case for why we could see something of a slowdown in the U.S., but still why the U.S. is a better growth trajectory than, say, Europe. So then why did you have the Euro region actually increasing to 1.3%? I know it's downgraded from your previous estimate in 2025, but where are the accelerators to get us away from what we're seeing now, especially given some of the trajectory in the industrial base in Germany?
Well, Germany's almost stagnated this year, almost close to zero this year. We see France doing a little bit better, partly because of the Olympics, but partly because of consumption as well, 1.2%. And we have Italy doing so-so, Spain much stronger. Next year, we think that there'll be higher growth in Europe, and not fantastic, when we're talking still 1.3%, but we see higher growth because we think that the recovery that we see in terms of purchasing power will continue. So because wages are recovering, and so I think this will have an impact on consumption. But we also think that some investment will take place, partly linked to the resilience fund that were spent by the Europeans on infrastructure projects. So this will help a little bit. So that's what explains a little bit better performance of Europe, but certainly not spectacular growth rates.
All things being equal, where is the growth really going to come from? Where is the growth engine, the new growth engine in Europe, at a time where some of the challenges for Germany are structural, especially at a time where Chinese growth has been unreliable?
I think you just mentioned something that is absolutely essential. Part of the problems with Germany right now are cyclical. So it's coming out of the energy crisis, and we know that there's been a downward trajectory for part of their manufacturing, but also services. And also because consumers in Germany have been very prudent, so they've been saving more than other parts of Europe. But there's also structural issues. You mentioned something that is absolutely true, which is competition with China, and particularly in manufacturing. And there's less demand from China as well for German manufacturing, so that is having an impact. But also there's another issue that I think is important to highlight. We think that Germans should focus on, first of all, improving their infrastructure, especially on digital infrastructure. They are lagging compared to other parts of Europe. But in particular, it's time to go back to reforms in Germany. There's many competition-friendly reforms that are needed. There's too many barriers to services in many parts of the German economy. It's still too difficult, too much red tape around, and we think this is having an impact. In fact, we calculated what's the impact of all world is, and you say that for the OECD economies, in order to be with the best practices, economies like Germany could it could increase growth by 3% over 10 years if they would do this type of reform. So besides the structural and the issues linked to China and the structure of the economy, we think that it's important also to go back to reforms for Germany.
Well, let's talk about China. The PBOC out with another move today. Do you think any of this is going to help spur the Chinese economy?
Well, we are forecasting 4.9% for this year and 4.5% next year. This was before the stimulus. But I don't think that there'll be a huge change in the forecast right now for two reasons. We know that their exports, Chinese exports, are doing fairly well. In terms of manufacturing in particular, they're doing fairly well. But consumption continues to be a bit subdued in China. So this could help. Some of these measures could help a little bit. But we think really the main ailment of China continues to be high debt, private debt. So remember, private debt is there, about 170% of GDP. It's mostly quasi because it's SOE debt, but it's quite private debt. And on top of this, we know that there is a very large real estate market, much larger than most economies. And so there's some adjustment that will have to continue. And so the question is whether these measures will be able to help demand or not. It's a question mark that we'll see in the next few months. But to be honest with you, if you look at the historical examples of other countries, when you have a big real estate adjustment, very often it takes a bit longer than authorities would like.